All right, everyone, it's Gordon Einstein, and I don't know about you, but I've always wondered how family offices work. These big, mysterious, glamorous boxes of wealth, power, and influence. Is it as romantic as that, or is it a little bit more mundane? I don't know, but I have a guest on right now who can answer all these questions and explain how they work. So, say your name.
Sidney Wheatley. Hi, Gordon.
It's not any other thing. See, we practiced it a few times, but I just wanted to make it perfect. Thank you for coming on
Thank you.
the show. I really appreciate it. What is your role? What is your title? Why are we going to listen to you?
Well, you don't have to listen to me, but if you choose to, I'm the chief investment officer at a private family office in Bahrain in the Middle East, um, where we manage all their assets across asset classes, either physical or invested assets. And a lot of people always ask me a lot of questions about how it works because it is quite mysterious. Although a lot of family offices are starting to seek more publicity, especially in the region. I think for American audiences, they really find us to be very, very much cloaked in mystery. So I'm happy to unravel that a little bit.
Thank you so much. And yes, I mean, obviously, I'm from Los Angeles, and we're not exactly famed for the family offices. They probably exist and operate, but it's not the world that I was in when I was practicing law. And here I am in the Middle East, and it was like, the family office of His Excellency so and so, and
Yeah.
it sounds amazing, and and somewhat opaque. So to actually talk to you is amazing. So just to kind of reiterate what you said, the office, give the name one more time.
Oh, it's the private office of His Highness Sheikh Mohammed bin Salman bin Abdullah Al Khalifa in the Kingdom of Bahrain.
Amazing.
Yeah, it's a mouthful.
It is a mouthful. Now, I have not yet visited Bahrain. I've been to UAE and Oman. Super fast. What is Bahrain like?
Bahrain's amazing. I mean, I've been here my whole life. Look, if Dubai is New York, Bahrain is New Jersey. We're the more quiet suburb that you can easily get to within an hour.
I think I probably would if you're unless you're American, I think I'd recharacterize you as Connecticut. I'm not sure you want to be New
Fair
Jersey.
enough.
Okay. Just to be fair to Bahrain. Okay, and then how do you become? Obviously, we're going to focus on how family offices work and your investment
Sure.
process, and everything else. I think that's what the audience would love to hear, but a little bit of context. Quickly, what's your background? What's your interest, and how did you end up with this particular job?
So I have a very atypical journey because like investment is absolutely not my background. It is now. I got into it about, I would say 7 or 8 years ago. My background is more as an operator.
Okay.
So I've always been, let's say, within companies at every sector, department of the company, operating companies. Eventually to the point where I started to run companies and then run groups of companies. And what I realized, like when you start to run
And I'm
a
sorry,
group of
you're
companies,
pretty young, I think. Can you give me your?
I'm I'm 41.
But so you've accomplished a lot pretty quickly. That's great. You can go on.
Well, I've been working since I was 17, so maybe not as quick as I'd like.
Okay. Wow. I give you credit. Don't throw it away. Okay. Anyway, so you're
Thanks.
41 and you have this fantastic position. You are entrepreneurial. You operate companies and then groups of
Yeah,
companies.
and what I start to realize is once you start operating a group of companies, it's no longer about being involved in the day-to-day details, although that's where I love to be, right? What you're really doing is essentially three things. You're trying to hire the best people,
Mm-hmm.
and you're trying to allocate resources as well as possible,
Sure.
right? So most resources are financial in nature, and you're trying to follow or create strategies that benefit your shareholders. Those are basically your three tasks whenever you manage a group of companies. Even if you manage a company, that's more or less your task. And I started to realize that my role is no longer going into those nitty gritty details. So I have to learn how to invest. I have to learn how to allocate. What does it even mean to allocate, right?
Mm-hmm.
And once you start doing that within a company, it starts to become very, very easy to do that outside of the company as well, because you sort of know what you're looking for. You know what a well-run company looks like. You know what a good management team looks like.
Mm-hmm.
You start to understand what a good product looks like. So I come from a very atypical background in that sense. Most people who are investors typically do banking and finance,
Yes.
Then they might do their CFA, start as an analyst in an investment bank, and work that way. I'm the opposite. I started absolutely at the rock bottom of a company as an archiver, which, if you've ever worked in a large company, you'll know that is the absolute rock bottom of anything you could do in a company.
I'm sorry, I got to jump in. It's funny, like I mentioned, I'm from Los Angeles, and all the entertainment agencies are there, and everyone starts
Mhm.
in the mailroom. And
Exactly, mailroom,
it
precisely.
sounds like that.
More or less, except so when you're in the mailroom, you at least get to go up every now and again and give people stuff.
Mhm.
As an archiver, I just got old documents and I had to figure out where to put them.
Got
So
it.
you're sort of locked up in a dingy basement.
Interesting. And did you actually get a chance to read the documents, and were they relevant?
I mean, this was in a shipping company. So you're talking about like bills of lading. So the only thing interesting about them was sometimes what's in the cargo, which
Mm.
could be PlayStations one day, it could be food the next day. It's all kind of different things.
Got it. So
Chemicals.
quickly take me the path of how you got into the family office world, and specifically in this
Sure.
role.
I mean, let's say super fast. Career in shipping, had nearly every job in shipping you could imagine: administration, customer service, sales, marketing, you name it. Moved on to environmental management
Okay.
in Holland. So we would try to improve the recycling scores of our customers through making them more efficient, making them faster, better separation, thus lowering their costs. Because if you know anything about garbage in Europe, anything you put into general waste is highly, you pay a lot for.
Mm.
Anything that you recycle, you pay next to nothing for. So you try to lower costs by encouraging that.
Okay.
Then I moved to Bahrain, worked in the environmental sector in Saudi Arabia for a bit. And the gentleman who I worked for at that time, the chairman, he had 11 or 12 companies. Um, I performed very well, so he appointed me to manage those companies.
Mm.
Then I got offered a job at this family office. I was kind of tired of working in Saudi because going up and down every day from Bahrain is not that easy. And I
Were you
thought,
flying every day?
sorry,
Were you flying every day? Or were you
driving,
driving
driving, yeah.
to
So
where?
it's like a
Riyadh
40-minute.
or?
No, 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 to Dammam. So it's like a 40
Okay.
minute, 50-minute drive, depending on how busy it is. Things have improved a lot lately. Like now it's pretty easy to get to Saudi, but I would say in those days it was slightly harder. The bridge was less efficient. Border crossing takes a while if it's busy.
Mhm.
So when I got the offer, I honestly I didn't even know what a family office was. I mean,
And we're gonna dive into that because I'm not sure the audience does either. But you got this cool offer for something that sounded very mysterious and exotic, at least to my ear. And
exactly, exactly. So I entered the family office, and look, what I've discovered is family offices are on a huge spectrum, massive, massive spectrum. So let's say if we have the spectrum here on the one side, they operate almost like an investment bank,
Mhm.
right? Where they have teams of analysts that are separated by asset classes. They have a CIO who has a clear investment mandate, a budget allocated to him, et cetera, et cetera. So they're almost at investment bank level.
Mhm.
On the other end of the spectrum, you have a guy and his accountant.
Okay.
And that guy and his accountant could be a multi-billionaire.
Okay. So let's take one big step back. Uh,
Sure.
we're getting from your history into what you're doing and how family offices operate. Give me family offices for dummy. What at the very root, what is a family office? What makes a family office a family office?
A holding company, right, that owns various assets in the name of the family. So at its very simplest form, it's just a WLL where all the family is shareholders.
Okay.
At more complex levels, it's a trustee structure or some other complicated structure.
Mhm.
But in essence, it's just businesses which are run by the family. And then the excess capital from that gets invested into either other businesses or given to external managers or whatever brings the most income.
Okay. Now,
At the
why
end of
are
the day,
family
the decision
offices?
makers,
I'm sorry. Go ahead.
I said, but at the end of the day, the family members are the ones that drive the decisions. So there will be a family board, or if there's still a very strong patriarch, the
Mhm.
patriarch might be, or matriarch, let's be fair, might be, let's say, the sole decision maker. And as the kids get older, they start to become more and more involved in the business and the decision making. The reason it's different from, let's say, a regular holding company is there's, next to, let's say, regular office dynamics, right, which is office dynamics, office politics, culture, things like that, you have family dynamics. So the bigger the family, the more, sorry?
Which can be even more fun.
Let's call it interesting.
Okay.
Right. I mean, I won't go into names, but like I know a family office, for example, where there are cousins that sit on the board, where it's almost like therapy every month, because it's more about, oh, you beat me up when I was a kid. Well, now I'm a bigger shareholder than you. I'm going to get you.
I understand.
So there's those kind of dynamics involved, right? So especially when you get to the third generation level.
Why? Why the third?
Well, think about what the first generation is. What's the first generation? Strong patriarch, matriarch, built the business. Let's say built the initial business that drives the cash flow. That cash flow drives expanding the business into other areas, more cash flow. That creates a holding company that then invests in external assets, right? That's sort of the path you would take. Second generation still listens to the patriarch, matriarch, is very invested in the business, might have seen the business grow from 0 to 100. But the third generation typically will be inheriting an operating business. And then it becomes very, very difficult.
Or maybe inheriting a suite of investments if the operating business has been liquidated.
Well,
there's liquidity
they're in this region, they're typically not liquidated. They're typically kept.
Yes, I noticed that. Okay.
Yeah. So, and then you get into 3 issues. One, you're much further removed from the patriarch or from the origin story. 2, it's no longer brother and sister talking or arguing. Now you're going to the cousin level.
Okay.
Right. And there could be many factors that cause there to be a rift or an argument, or, as I mentioned previously, some dynamic that's not really related to business that comes into the board. For example, let's say somebody's son gets appointed as MD, as an example. Okay, well, how come his son got appointed as MD? What about my son? Right? Those kinds of dynamics come into play. So it becomes very much harder to keep it as a cohesive company. So I think once you get to the third generation, you really have to have a solid plan in place. Like the best family offices I know are run almost like publicly traded companies. So there will still be.
What does that mean in the family office context?
That means that there is a clear board of directors who is nominated by the family to represent, let's say, all the different shareholders. There's rules around, who can be a manager, who can be promoted, who can be hired, who can be fired. It doesn't necessarily mean that a member of the family will be, for example, the CIO. They might hire the best CIO they can find, right? With a family member shadowing him.
Okay.
Something like these kind of rules of governance that make sure that everybody has to play by the same rules. There's no favoritism, there's no politics. Almost impossible, because even in publicly traded companies, there's politics, right? But it needs much more formality and structure. You can't just rely on where a family will get through this together.
No, and I think once you start hiring independent, I think you're implying this, when you start hiring independent non-family membership and board members, a little of the pathos may exit the building, because you're not looking at the guy who beat you up when we were 2. Maybe you're looking at,
for example,
somewhat aggrieved representative, and like, okay, let me just get the money.
Well, I mean, it just becomes a lot better. Like when you have independent, because think about this as well for a second. Let's say you have only family members on the board. Do you think that there's really going to be a diversity of thought or a diversity?
I think it depends on their relationship.
Most likely you come out of the same milieu. You might have even graduated from the same schools. So I don't believe that there's going to necessarily be a good diversity. I mean, there could be, of course, but having an external person that doesn't really have skin in the game just allows there to be fresh ideas, allows there to be challenges that might not have been there before, right? It might allow someone to challenge the status quo,
Mhm.
or other board members where others might shy away from it, right? Because, oh, I can't challenge him because he's my older brother, or I can't challenge him because he's my older cousin.
And I've noticed that in Middle Eastern Arabic / Muslim culture, there is that clear family hierarchy of, I guess, deference to the older sibling, and especially to the
Yeah,
parents.
I would call it Eastern culture. I mean,
Eastern, yes.
you
Chinese
know,
probably too, right?
it's not just here. I mean, Chinese, India. I mean, it's you always defer sort of culturally to the oldest person in the family. Now it's changing. Like Middle East is changing at a breakneck pace. I mean, a breakneck pace. And I think the best family offices and the best families are realizing that they are no longer just competing in their little emirate or their little country. They want to go compete on the global stage,
Mm.
and they want to compete with global players. And I think they're very cognizant that unless they sort of pick up the governance structure of those big companies, they will not succeed. So that's why I say it's a spectrum, right? There's lots of family offices I know that are basically going defunct right now because it's reached the third or fourth generation, and there's just not enough care, love, and attention to keep the business going or to
Okay.
keep the investment office going.
All right. So here, let's use that as entry point for this. Why are family offices such a thing in this region? I'm not sure we got a totally clear answer to that.
Oh, okay. That's actually a very, very good question. I think it has to do with these are all very young countries. You
Mhm.
know, I mean, most of the countries here in, let's say, the GCC. So, for those of you who don't know, GCC is the Gulf Cooperation Council. The members are Bahrain, Saudi Arabia, Kuwait, Oman, UAE, and Qatar. Collectively known as, let's say, the Gulf countries, or
Mhm.
colloquially known as the Gulf countries. Most of them got independence from Britain in 1976. So they're still very, very young countries. If you look at, for example, UAE, I mean, UAE really got going in the mid 90s. Bahrain might be a little bit older.
Okay.
Saudi is just starting to go in full swing. So it's typically, let's say, entrepreneurs who drove economic growth at that time.
Mhm.
And there's not necessarily a need here to exit, right? You don't have to IPO your company. A
No.
lot of these businesses just generate a lot of cash, so you can live very well, very comfortably. There's no taxation, so there's no pressure to exit your business. There's no pressure to sell to someone. You can just continue your business. And then as the business grows and as the family grows, you add other things. You add agencies, and because it's a young country, there's needs for lots of things, right? So,
Mhm.
for
What do
example,
you
what's
mean when you
hot
say
right now?
agencies?
Being like an agent for Toyota, for example, being the exclusive seller of Toyotas in Bahrain,
Okay, I understand.
like that's a big deal. Or being the exclusive seller of IBM or the exclusive representative of whichever company. A lot of the big families got rich that way. Or having a franchise like Starbucks. I mean, Starbucks is a massive cash cow.
Mhm. Albeit slightly
Um,
controversial at the moment, right or wrong, but yes, I got you.
yeah, okay, fine. It's just an example of a cash cow
I know what
business.
you meant.
Um,
Okay, fair enough. So my American mentality is that when you invest in the company or start a company, you're thinking of your exit from the start. But that does
oh,
that
hell yeah. Especially where you are in LA. Yeah. I mean, the second you start your company, you're already thinking, how the hell do I get out?
right. And your
How do
investors
I get my
are going,
cash?
when is my liquidity? Let's go.
Yeah,
And
exactly.
especially in
Whereas
crypto,
here,
there's like, where's my
oh God,
liquidity?
I can only imagine. I can, and especially with the ups and downs. But here, there's no kind of pressure like that. You've got plenty of cash coming in. There's no taxation. There's no external investors that are pressuring you for an exit. And even if there is an external investor, they're probably getting very, very decent returns. So you end up pumping a lot of the money back into the business, growing very, very nicely, having huge teams. So why would you ever exit? Well, what's the point?
Okay, so I'm
Now,
gathering you have the matriarch patriarch couple, young or middle aged, starting their company and having their kids, they do well. And rather than, I think I'm hearing, rather than divvying it up like Johnny gets this and Abdullah gets this, they're using this property management technique to keep it sort of all within the clan, and then
Sure, but I'm
ever
speaking now
increasing wealth.
historically. I'm speaking historically.
Okay,
These days, it's a little bit different. I don't think that there is that kind of relaxation about exiting anymore. Now we're getting a lot into startup culture and external investment and things like that. So there is these days a pressure that when you do start something new and you take external investment, that you have to have a path to exit. Like what I'm speaking about is historical context for the
I understand.
big family offices that exist today.
So this is how they spawned. Now, what is
Precisely.
the correlation between royal or noble families, whatever the term is, and family offices? Because each one seems to have.
Each country, you mean?
No, each highness this or prince that seems to
Mhm.
have their own family office. That's my impression. Is that
Well, why wouldn't they? I mean, if you have a good, let's say, AUM, right? If you have good assets under management, or you have a good number of assets, why wouldn't you professionalize it and turn it into a holding company under your name? It just makes a lot of sense.
but I guess what I'm asking is I understand the entrepreneurial origins of a family office. You explained that pretty well. Someone starts a company, it does well, it grows. You don't have exit
Sure.
to liquidate, and you start investing in other things. What I'm pointing out also is that a lot of the royalty, which in my mind isn't necessarily the business starters, and you can correct me if I'm wrong, they have the family
Well, you'd be
offices also.
surprised. You'd be surprised. A lot of royal family members I know are actually very, very entrepreneurial. They might not be directly entrepreneurial, but they definitely hire people who are entrepreneurial and go and do things for them.
Okay,
Um,
good answer.
and next to that, being royalty, they have, let's say, their own sources of wealth
Mhm.
that need to be properly managed. I mean, okay, let's say in the 80s or 90s, you'd give it to JP Morgan or to whichever asset managed company. I mean, Merrill Lynch or something like that back then,
Mhm.
and they'd manage it for you. But I think they've come to realize that I'm big enough now that I can do that myself. And if I have a semi to professional management, I can get much better returns.
Okay, because I was about to ask why don't they continue, but there's a higher return on investment possible through the family office structure and having your own staff. What's the
Um,
benefit?
Look, let's take a nuanced view on things. Yeah, everything should be sort of everything is not black or white. It's very gray.
Sure.
Um, and it's definitely possible if you manage your own assets that you will get a much higher return. Like if you give it to an external asset manager, I mean, you already lose 20% of the upside and 1% per year on management fees. I mean, just instantaneously. And it's not in your hand, right? Someone else is managing your assets. I think there's also an element of pride in saying, this is my office. This is my team. And these are the things that we have. You're sort of building your legacy or your family's legacy rather than having, whichever external asset manager build your legacy for you. Now, that being said, they might make a decision that says, okay, look, we have, 70 or 80% of our assets that are managed by us. Let's take 20% and give it to an external manager. That might make sense as a diversification strategy. That might make sense if, for example, you want to be exposed to venture, but you don't have the expertise in house to do venture, because it's a completely separate skill set to regular investing. I mean, VC is even within VC, there are different skill sets, whether you're pre-seed or series A, B, C, D.
Sure.
So you might find an external manager who's good at that, or if you want exposure to real estate in New York, for example, you might find an asset manager who's good at that. But having a team that determines that for you, rather than ad hoc allocating to someone, I think is a wise choice for a lot of these family offices, considering that their assets under management are probably very considerable.
Okay, I like this answer. So a family office, I think you said WLL or LLC.
Sorry. So WL is like just limited liability. So a corporation.
Fine, fair enough. Where do those tend to get formed? Are they in the country where the family is situated, or do they do it offshore? What's the normal practice?
So we have no need to do it offshore because there's no taxation liabilities. There's no Like we don't have to do all the weird things that you guys do in the States. What do they call it? The double Dutch Irish sandwich and things like that.
It's
Uh,
insanity.
it's absolute insanity, and like it's crazy because all we're doing is giving money to people like you. By that I mean lawyers. Um,
Thank you. No,
you're
not
welcome.
unfortunately not to me
Um,
personally. I wish.
yeah. Well, maybe in the wrong business, my friend.
Well,
But
we'll talk.
but no, we don't have to. We don't have to have these complicated structures. You can just have a simple company, and then depending how big the company is, right? You might want to go to a closed stock formation, or you might keep it as limited liability, whichever. But at the end of the day, it's just a normal LLC or a normal joint stock company.
Okay, very very interesting. And is it something? Must you be from the? Do you ever see someone not from the country you're talking about decide to go there and set up shop as a family office? Like, would someone like me set up
Okay,
a family
so
office in the UAE
I mean, look, in the UAE,
just by
you
way of
must know this.
example?
There are so many, for example, family offices of Indian origin,
Mm,
right? And they probably came to the region in the 80s, started small, and built up massive businesses. I mean, an example of that, and I'm blanking out on the name, but they started in Bahrain, actually close to where I first lived in 1986. They
mhm.
started with a small toy shop, selling cheap plastic toys, made in China. And, made in China in those days meant pretty bad.
Yes.
But they grew it into a multi-million dollar company that has, I think, last I checked, 6,000 stores across Asia, the Middle East, North Africa. And they are now based in Dubai, and they operate their family office from Dubai.
Okay.
So I think there's lots of opportunities here for foreigners to do that for sure. And even Dubai, if you think about Dubai, especially during and after COVID, so many high net worth people said, you know what, I don't want to be in, New York or wherever there were severe lockdowns.
Or Los
I want to be
Angeles.
in a place, or Los Angeles, yeah. I want to be in a place with super nice weather, albeit sometimes hot, a nice milieu, like-minded people,
Mm.
where I don't get taxed to death, with rules that don't mean that I'm locked in my house 24/7. So many people moved to Dubai. So many people moved to Dubai and said, "Why would I go anywhere else? I'll just set up my office here and manage my assets from here."
You're preaching to the choir. It makes a lot of sense. Okay, now let me shift gears for a second. If I want, suppose who has an interest in talking to a family office? Is it someone with a company to get funded, or what's the conversations you have with external parties?
Um, so for the last I would say we're in 2024 now, right? I would say
Mm,
for the last 6 years, I've seen an exponential growth in the number of people from, let's say, Europe, America, Near East, and Far East, um, come to the Middle East for funding. Now, that's for a multiple number of reasons. One, funding has kind of dried up in your areas, and the Middle East has plenty of cash. Um, Saudi Arabia has changed dramatically in the last, 5 or 6 years. I mean, they've done more change in the last 6 years than probably in the last 600 years. It's been insane. But I
mm,
would say the main thing that happened is the sovereign wealth funds started to really, really invest outside of the region. Like they really started to flex their muscles.
mm,
And then the family offices started to realize what was possible and followed suit. So what used to happen 5 or 6 years ago is you get an asset manager who might come to Dubai for a week, go to Adia, go to the other sovereign wealths. I'm just blanking on the name. They might visit PIF, they might go to QIA. And then they started to realize I'm here anyway. Let's meet these big families. And these big families started to realize, why don't I, instead of going to my investment bank, why don't I give it directly to an asset manager? So the ecosystem has started to evolve in a big way. And then especially when Saudi started to give, 10 billion to SoftBank, 10 billion to BlackRock, started to invest crazy in these external managers, I think it really opened up the floodgates. And now you get everyone looking for funding from a startup in Silicon Valley all the way to someone that wants to do a private equity deal, diverse asset managers, crypto people
mm.
come here looking for funding as well.
So
So I would say,
you open up a lot of interesting topics there. When the sovereign
sure.
wealth funds, you said they started to invest in broad. Was there mandate earlier to invest locally? How do they?
So
What was their starting point?
so look, it's a bit opaque
Mhm.
for me because, as I said, I've only been in this game for 10 years, so I don't know exactly what their mandate was before that.
Mhm.
But it just became more apparent to us that more and more of these big investments were being done outside of the countries. Now, I don't know if that was mandate driven or if it was PR driven. Like, I'm not sure exactly what the genesis was,
Mhm.
but it just became more apparent. And it became more and more apparent that asset managers were starting to land in our countries looking for meetings,
Okay.
driven by, I'm here to see sovereign wealth anyway. Can I have breakfast with you? Could you introduce me to another family? So it started to become like tour Middle East.
Mhm. Okay. And if I'm flying in from Silicon Valley and I'm not BlackRock, but I'm a respectable startup or private equity or something like that, how do where's the Rolodex? I'm dating myself. How do I get the meetings?
Uh, that's a really good question, and it's very person dependent. Look, I would say that most families in the Middle East are pretty open and pretty friendly,
Mhm.
and they're pretty much open to taking meetings. What Americans tend to get wrong is they tend to take their, all right, we're going to get this deal done today kind of attitude. Whereas we are very slow. We'd like to build a relationship, get to know you,
Mhm.
more, long-term relationship kind of stuff. So I think getting the meeting is not that hard. If you find someone on LinkedIn, or if you can find a telephone number on a website or something like that, it's not that hard to meet with families or even sovereign wealth. I mean, if you were to go to New York these days, you'd find sovereign wealth representative offices for probably all the sovereign wealths in the Middle East. PIF
And you can
opened,
get in.
Mubadala opened. You can get someone to talk to you.
Okay.
Now, they might not be interested in you for whatever reason. You could be too small. You could be in the wrong sector. There's 100,000 reasons to say no to a startup,
Sure. And to be
right?
clear, I'm not, obviously it's your job to make the sale, make the relationship once you're in the door, but the door is not bolted shut. You can open the door and
Oh,
have a
absolutely not.
conversation.
No, absolutely not. And look, there's plenty of conferences that lots of family offices attend. I mean,
Mhm.
I met you at the Retosa conference in Monaco.
Yes.
Um, and there were plenty of family offices walking around there. You could talk to them, you could get their cards. Um, I've never met one that just sort of says, "No, I don't take meetings." They
Mhm.
take meetings all the time. You know, everyone is eager to expand their business, to get new avenues of income, to get fresh, exciting ideas. Historically, we're driven by oil and gas and real estate, but people would like to get into other sectors as well. Especially venture sectors. So I think everyone will be open to taking a meeting at some point, um, but don't expect the deal to be done the same day, right? I mean, I get anywhere between 100 to 200 proposals a year. Let's call them serious proposals. I can maybe say yes to one or zero,
Really?
depending on how it's going that year.
And,
So
and
these are
is that the nature of your
long-term
family
relationships.
office, or would you say that that's typical?
I would say that's typical. I would say that's typical. I think depending on the size of the office, of course, and the size of the teams, I
Mhm.
would say they probably do no more than 3 or 4 deals a year.
Okay.
If
And
it's a very professional team, it might be more. Sorry, go on.
so do they sometimes syndicate it like a venture capital firm might?
That that's starting to become more and more popular. That was not done in the past a lot, but these days they will syndicate it, although not on a huge level. But there, let's say one person will take the lead, say,
Mhm.
look, I don't want to do the whole investment. I'll bring in, I know this guy from this family office or that guy from that family office. That was not always the case. It was much more competitive in the past,
Mhm.
but there's a greater spirit of collaboration now, much greater spirit of collaboration.
And I'd imagine that's somewhat related to the global outlook. There's just so much to do.
Yeah.
The whale is so big, you need help eating it,
Oh, 100%.
right?
100%. And there's just so many opportunities. There's lots of stuff going on, especially again in the region. Things are moving at a breakneck speed. I mean, you've lived in Dubai now for how many years?
Not that long, actually, 3 years. And I think I met you just to get more personal, I think I met you towards the beginning of that period, if I'm timing this correctly.
Possibly.
I
It was
think
it was
I was in
definitely
Dubai and I
COVID,
went up to
so it
Monaco.
must be 2021.
Yes. Okay. So that's when I first got here, and I was in Cannes in South France for Rutosa and for the CC Forum, and just for
Sure.
some other cool stuff. You and I ran into each other, and I think did we go to the Buddha Bar in Monaco? Is that a thing, or we went to a cool?
I cannot remember.
I don't
Offhand.
know.
My,
We
my,
started
my memory
talking.
is not that great.
This guy's interesting. I have no idea what he's saying, but this sounds cool. Um, yeah, interesting. So the yeah, and that's true. There you are, and you had your current job. You're in
Mm,
Monaco at this thing.
yeah.
That's fascinating.
So yeah.
Right.
So we started talking, and look, you're really into very nascent technology, right? I mean, you are literally into the most nascent technology there is. I mean, people say that AI is nascent. We could debate whether AI is even real,
We could, but that'd be another
whatever.
show. But that'd be a very good show. Well,
But I
I'm
would
into
I would
making stuff
say
happen.
crypto is more nascent.
Sure. You mean like up and coming and present? Oh, okay. Whole separate conversation. But you're getting to the next thing, which is if these offices were built on traditional brick and mortar, and it sounds like they were, or agencies,
Mhm.
or oil and gas, or real estate, and but this brand new great world of robotics and drones and crypto and AI and blockchain is all happening. How do you bite that apple?
Well, the first question is, do you want to bite that apple? Right.
That's a good point. So
So
let's posit that it's interesting and it's going to provide future returns. Let's take that as an axiom, and then we'll back up into
sure.
whether that's actually true. But how would
Look,
one approach
then
it?
so there's two ways for these kinds of things, right? You're either investing into the technology itself,
Mhm.
or you're investing in the technology to be used in your business. Now, the question is, which is more effective? Now, I would say probably, right? And I'm far from an expert, but the way I would approach it, I would not invest in the technology because you are, sorry, into the technology itself, because you just don't know, right? It's hard for a family office without expertise, and these things require absolute expertise to understand even what is the difference between OpenAI and XAI and whomever,
Mhm.
right? Okay, they're all LLMs. Okay, what's an LLM? How does, like, we don't even know how they're going to make money. But
Mhm.
what you can do is invest in the technology to use in your own businesses and make your businesses more efficient, faster, cheaper to operate, better quality service, et cetera, et cetera. So from my perspective, I would rather do that than invest in the technologies themselves. Because if you do that, you have to take a VC mindset, and VC mindset is very different than a traditional investor, right? I mean, you have to be willing to lose money 99 times and then make it all back in the last one.
Mhm.
Yeah,
Well,
approximately. I'm exaggerating slightly, but you get my point.
you're not totally exaggerating, but you're making me wonder whether family offices do the same sort of asset allocation strategy, prudent investor thing that's a trustee of a trust might do, if that's a similar mindset.
It's starting to get there, and again, it depends on where we are on the spectrum. So
Mhm.
some family offices now have a venture arm, where they themselves act as a VC, investing into up and coming companies, into up and coming technologies. But on the other end of the spectrum, um, they are just not set up either mandate wise or mentally or even just in their own processes
Mhm.
to to really evaluate venture opportunities. Like it's as I said, it's a completely different discipline, right? And the earlier you go, you're not even really looking at the technology, right? Like if you're looking at seed or pre-seed, the technology is kind of irrelevant. I mean, it's
Mhm.
relevant in that you should look at it and see what it's going to do, but the biggest thing that makes it a success or a failure is the founder. So it's
Okay.
almost more like an HR thing rather than an investment evaluation thing. Like, can this person and his team or his co-founders or her co-founders, can they take this idea, pivot 16 times until it's actually something that the market wants or needs,
Mhm.
and make it something that they can scale globally? And that's a totally different mindset than, can I take this company, buy it, improve it, and sell it 5 years later? Both could make money, but it's a completely different mindset. You cannot have the same person do it. It's almost impossible.
Point well taken. So, it's funny, as you're describing the alternative to the VC, that's obviously evocative of private equity. Is,
Yeah,
is private equity more of a native fit or private
100%. Yeah.
equity? Okay.
So what we're seeing a lot now. So I mentioned there's the third generation curse, we like it called, right, in
Yes.
families, where suddenly assets are available from a family that's no longer interested in running them.
Mhm.
So a lot of deals these days are being done that way, where a family will acquire the assets of another family
The
that's either
family,
no longer interested in.
okay, that's interesting. So why are those assets being brought to public market and to the
No,
most,
it'll be done as a private deal.
why is that the dynamic here?
Um, because most families don't put their businesses up for IPO, so they don't make it a public company. If you make it a public company, you don't really effectively even need the family anymore, because you have other external shareholders. They will appoint their independent directors. You'll have a governance structure.
Mhm.
It changes the dynamic.
But
Um,
even
and
separate
look,
from IPO, do they consider bringing it to to the private market, or is it sort of all within the families?
no, I'm just highlighting that. See, a bank might buy that family's assets. A publicly traded company might buy that family's assets. I'm just saying that a lot of the PE deals that I'm seeing are existing businesses run by families that have
Mhm.
reached the third generation or reached, whatever, whichever generation. It's no longer interested in running that core business and selling it to an external investor who is either a family, a bank,
Got it.
what have you.
Wow, this is a fascinating world. And what was you following up on the theme of who do you want to talk to and who should talks to you? What was your motivation to attend the Rotosa conference? Just to use an example.
Um, I think it's always good to expand. Like, look, we're pretty good in the region.
Mhm.
You know, we can pretty much get in touch with anyone. It's fine. But globally, it's just good to get to know people. It's good to get to know what's going on in the States. Are there opportunities in Europe I should know about?
Mhm.
Should I be thinking about the Chinese market? And I think events like that, they help in two ways. Once you get to meet people, such as yourself, but you also get to attend, talks that talk about these things.
Mhm.
Where the opportunities are, where the challenges are in the market that maybe we as a smaller family office that doesn't have a massive team need to think about.
Okay, so is keeping your feelers out and being kind of tuned in all the time.
Sure.
Are you sitting there watching YouTube videos and reading reports and consuming information? Do you have people do
Um,
that for you, or how do you stay current?
um, well, obviously we consume a lot of media, right? Me primarily. So let's split into two things.
Mhm.
So if you talk about deal flow that we're interested in, that just comes to us. I mean, I can't really explain it. I'll get a phone call. Uh, there will be a conversation. Something will happen. You don't really have to read the news for that, because most of the deals that we're interested in don't come on the news.
Mhm.
Separate from that, because I'm personally very interested in technology, I consume a lot of technology news. I'm always interested in where things are going, how they're developing, where money is being spent, or sometimes laughing at where money is being spent. No offense to the 10 billion Apple spent on Apple Car. Loose
No,
change.
no offense to them, right?
Yeah.
Yeah. All right, go ahead. All right,
So yeah, so we don't really need to consume, especially for the region, we don't need to consume a lot of media, because we're looking for those deals that really aren't in the media. So it's basically you're leveraging your network.
okay, this is fascinating. So, and let's tease that out exactly. You're the CIO of this family office. What is your mandate?
My mandate is to make sure that the current businesses stay running and profitable,
Mhm.
to allocate money to those businesses where they need to expand where it makes sense, to allocate money to new industries. So if we want to, for example, expand into Saudi Arabia or into UAE or into any other country, or if we want to expand into let's say a core industry that we are not currently in,
Mhm.
that's primarily where we are super interested. And if there's excess cash after that, either look for an external manager or find some other asset class that's relatively liquid that we can get some decent returns from. And these days, our version of T-bills are probably the best on a risk-adjusted basis.
Got it. And then one last thing, and then I think we're good. This was a great interview. You've mentioned directly and obliquely several times what's going on in Saudi. And you've been doing what you've been doing for 10 years, if I heard that correctly.
Yeah.
How has your life been impacted by Saudi's opening up and growth? How's your office been impacted?
Well, it's been impacted in that whenever we make a new strategy, we have to think, okay, how can this serve Saudi? Because there's a huge demand spike in Saudi right now for all kinds of things. Think about basic commodities, steel, sand, cement, glass. There's a huge demand for human capital. You can't just open up all these companies initiatives and fill them with, high school graduates. You have to bring seasoned professionals that are able to manage, hundreds of millions of dollars, etc. So there's a huge demand for lots and lots of different things and all the ancillary things that come with that. So we're always trying to think about how can we service that? How can we provide a service to Bahrain? Of course, that's our primary home. That's what we always want to serve. This is where we always want to be. But if we can expand that service into Saudi Arabia, that's something we definitely take into consideration every time now.
Interesting. And then it sounds like you go there a lot. How has the vibe evolved in Saudi? We get like on a visceral level.
So I'll give you an example that's actually not related to investing.
Okay.
So from time to time, I deliver courses on innovation, design thinking, digital transformation, those kinds of things. It's just a personal passion that I have. And I deliver it sometimes to banks and things like that. Now, 10 years ago, if I would have done that to a typical bank in Riyadh, everyone who's there is just not interested. They're sort of ticking the box, attending a course and, getting on with their lives. So no response, sleepy, don't care, don't show up on time, etc. I delivered one recently, 6 months ago, and everyone is there. Everyone is eager, hungry. I would describe it as hungry. Everyone sees that there's opportunity now for them to exceed, excel, get a leg up, become something in the country. So if I run that session, or let's talk about the session 6 months ago, immediately hands up. Okay, you're talking about innovation. How does that affect my bank? Okay, we did this and this and this. It's not working. Where can we improve it?
That's
very
great.
pointed, deep questions. And you feel that everywhere. You feel electricity. If you were around in Dubai in 2002, similar vibe. The only difference I would say is that Dubai grew on a lot of foreign investment and on a lot of borrowings. Saudi is dispensing a lot of its own cash, right? It's taking its considerable oil wealth and spending it on the country. So it's going to be a massive growth engine. I mean, Saudi in 10 years will be unrecognizable to Saudi today.
Is Saudi spending the money generally well?
Look, it's hard to say, but let's make a general rule. As a general rule, whenever you have massive corporations that have extremely ambitious mandates, there will be wastage. That's just going to happen. Right? It doesn't matter if you're in America, it doesn't matter if you're in China, it doesn't matter if you're in India, it doesn't matter if you're in Saudi. That is just going to happen. So probably, right, in the next 2 to 5 years, there might be a slight foot off the gas to sort of assess, okay, hold on. We spent, 10 billion here. Did we achieve our goals?
Yeah. Does the line city in the sand that goes for 100 kilometers really make sense?
Well, whether it does or not,
I'm being tongue in cheek a little bit.
It's a super cool idea, but it's a good question, right? Because I'll give you a very stupid example from my own life, right? A very stupid example from my own life is I wanted to build a house. The architecture gave me a drawing, or the architect gave me a drawing, right? Beautiful. I took it to an engineering company and they said, this is not practical at all. You have to remove this, you have to change that, you have to change all these little things, otherwise it's not practical, right? Because this material is not good enough, the sun will destroy this part, a lot of little things. So take that and multiply it by 1 billion and you get the line. So you've got an architect's idea of what it should be, But once you get into the engineering details, they might determine it's not long enough, possible, probably not. They might determine we need to make it slightly wider, slightly smaller, slightly taller. There's going to be a million engineering challenges that have yet to pop up. So they will definitely adjust as they go, like 100%.
Okay, but it doesn't sound like a train wreck. It sounds like just the normal thing that would happen if you're spending a lot of money quickly.
It doesn't sound, look, ultimately, there will be a train wreck somewhere.
Mm.
And that's just a statistical thing. There has to be, right? Because everything operates on a normal bell curve.
Mm.
So you're going to have great successes on one end, right? You're going to have a lot of moderate successes in the middle, and you're going to have a bunch of failures at the end. And I think that's normal.
Granted, I guess I'm just saying the push taken in the aggregate doesn't seem to be like a train wreck. They seem like they're generally going the correct
not
direction.
at all. Like people outside need to realize that Saudi is already one of the biggest tourist destinations in the world.
Mm-hmm.
Like it was one of the biggest tourist destinations in the world before they had their big change. Why? Because
now,
we
was
have
that
Hajj.
Islamic tourism or was that
it's
other
100% Islamic tourism, right?
Mm-hmm.
But think about this. There's probably about a billion Muslims in the world.
Yes.
Right. And all of them at some point in their life are going to go to Saudi Arabia. Now, a lot of them don't have enough wealth to do tourism in Saudi, but a lot of them do. But what typically happens is they'll go and do their Islamic tourism for 2 or 3 days, and then they'll go to Dubai. What Saudi would like to do is take those wealthier individuals and keep them in Saudi, as well as attract Europeans and Americans and South Americans and Chinese and all those things.
Mm-hmm. You're motivating me to go. I have to admit I haven't gone, but everyone I talk to,
Gordon, come on. You have to go to Saudi. You have to go to Saudi.
When are you going next?
Next week. I don't know. I go a lot.
I'm going to Paris. Yeah. Fine. You know what? I think I reached the tipping point with you.
Sure.
I'll just go for the heck of it.
Excellent. But my point more being that as an outsider, you see it and you say, oh, Saudi wants to become a tourist destination. Who wants to go to Saudi? About 1 billion people, give or take. And if 1% of those are middle class and above, that's a massive, 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 massive market that they can cater to.
Yes. Wow. All right. We covered it. We covered a ton. I want to keep it. We actually went for a while. You were very generous with your time. So, boss, thank you so much. Any final points you want to leave the audience with? Anything you want to share? Anything you want to share that you're looking at?
I think, look, if you are an asset manager, or if you are someone seeking investment and you haven't thought about the Middle East, you're missing a huge opportunity. Don't believe everything you read. The Middle East is a great place. There are very sophisticated places allocating money very well, and you should try and be a part of that.
I love it.
And if you have a business that operates in America, come to the Middle East. There's lots of appetite for technology. There's lots of appetite for services. There's lots of appetite for new ideas. There's lots of appetite.
I love it. And you know what? I'm jazzed up talking with you, and I think everyone watching this will be jazzed up also. Okay, Sidney, thank you so much. I really appreciate it. I'm going to cut it because I think we're at like an hour, which is the max I like to go on this, and I don't want to lose the audience. This was amazing. Maybe we'll do a follow-up in a year or so, just kind of see how things are progressing. But it's a pleasure, and I'm glad that the show provided an opportunity for us to reconnect. And I appreciate you taking the time. I know you're a busy guy, globetrotting.
No, happy to do it, Gordon.
It's a fascinating conversation. Okay, I'm going to stop the recording. Amazing.